Okay, so what do? Our office literally, the charge of my office constitutionally is to appraise or to assess all of the properties in Hillsborough County. There's about 520,000 properties, more or less. It varies a little bit each year depending with cutouts and joins and those kind of things, but it's usually in the neighborhood of 520,000 properties. And that's residential, commercial, industrial, vacant properties, greenbelt properties, out in the rural areas. Tangible personal property is the area that people don't talk about that much, but that has to do with the returns for businesses like your own that come into our office, similar to your tax returns that you send into the federal government that details the stuff that you use in your office every day. You can see a picture there of the kinds of things that should be on your tangible personal property return. I will point out to you that there's a $25,000 tangible personal property exemption that you can apply for if you have less than $25,000 in tangible personal property as part of your business, small business. Then you're exempt from tangible personal property. That's not automatic though. You still have to file a return and show that you have that. I will also tell you that I've been a big advocate to raise that limit. Many large states like Florida have a larger limit for tangible personal property. I would advocate that it should be $50,000 or $100,000. That way we would grab a lot more small businesses, small and medium-sized businesses, who frankly it would help small businesses. It also would give us the opportunity to work more closely and really focus on larger businesses that are more complex than it's kind of funny that it's much easier to figure out a $30,000 return than it is a $300 million return. And frankly, that sometimes those get more complicated. And I think in some cases they get away with more than the smaller ones. So the problem with that is that the state has balked at that because many of the rural counties, the tangible personal property, and you'll see on the next slide, is a much larger percentage of their tax roll. But I think there's ways that we could either have an opt-in provision or a graduated scale in some of the smaller counties to keep them whole. But okay. All right, so here's our dashboard. I won't spend a lot of time going over it, but I think it's pretty illustrative of everything that goes on in Hillsborough County in terms of our tax base. But you can see that from 2019 to 2020, there's three numbers there, but the adjusted market value, there's about $167 billion of value in Hillsborough County. When you back out assessed value, when you take out exemptions for like nonprofits and government properties and stuff like that, then you have about $144 billion. And taxable value, when you take into account the Save Our Homes cap and other things like that, and other exemptions, some that Steve wants to have for his property but hasn't been able to get yet. Then you end up with about $113 billion worth of taxable value. And you can see the description of pie chart of basically what the property counts are. The vast majority of property in Hillsborough County are residential in nature, whether it be single family residential, multifamily, or what have you. And you can see the percentage of just value. Again, if you look at the tangible, which comes from business, it's a fairly small slice of the pie versus others, but kind of gives you an idea. The Value Adjustment Board, maybe we'll talk a little bit about what that is, but if you start, that's the quasi-judicial process by which folks can challenge their assessments or an exemption that they may believe that they should have received. Any given year, you can see by year the numbers that we have, and in 19 we had about 26 or 2,700 Value Adjustment Board petitions, again out of 520,000 properties. To give you an idea, some jurisdictions like Miami-Dade probably have 200% more. I mean, they'll have 60, 70,000 or more. And at one time, they had triple-digit Value Adjustment Board petitions in a given year. Ours are, as far as a jurisdiction, are quite small. And I thought that we would see a big uptick this year in 20, but we really didn't. Maybe just a couple hundred more, given the COVID the effects we've had from COVID and those kinds of things. Out of all of those, the vast majority of those are withdrawn, either satisfied or we've gone back and fixed the situation if they're either granted them or what have you. Very few of those go forward all the way through the process, and I'll talk to you a little bit about the process I think later on in the slides as we go forward. On the right hand side, you'll see some of the question again. This is through 19, and part. I guess we may have some 20 numbers. Yeah, we do actually. 20 to 21 as well. You can see how permits have gone up, residential permits. The 2021, that's partial because it's not, we're only partially through the year. That'll continue to roll and get bigger. It'll be very similar to the 20 number at the end, but you can see the activity that's been going on out there. And as you know, if you're in the real estate business, the inventory is quite low. A lot of folks have been doing additions and different things to their homes. And then even folks that are selling their properties are doing different things to them. So obviously the permitting information that you see there can show how busy that we've been, and the sales counts as well. Again, we don't have the numbers, but they're very similar. We've had very strong sales throughout from 18, 19, and again here in 20, even in the face of COVID. But how do we do it? Well, there's a couple of things that we do. All properties in Hillsborough County and by law in the state of Florida for each county have to be inspected, physically inspected, over the course of a 5-year period. We actually do it over a 4-year period. So literally the county is cut into 4 sectors and we physically inspect the properties. Now, as you might suspect, even breaking into 4, that's hundreds of thousands of properties each year that we have to look at. And so there's 2 ways really that we do that. And one is the old-fashioned way is the windshield assessment, where we actually send our cars out to see our fleet of green Priuses, something that we instituted and saved us an awful lot in terms of our carbon footprint as well as fuel costs over the past 8 years, and nearly 8 years. But we literally will drive by and make a windshield assessment of what we see and make sure property, if we see any changes and what have you. So that will suffice as a physical inspection, and that's the way that's been done by the property appraisers' offices everywhere for a long time. The thing that we instituted here is that we created a windshield environment at a desktop using 2 large monitors and all of the information at an assessor's fingertips, using enhanced aerial photography and street views, and so that we can literally drive down someone's street at a desktop. And that's becoming that we call that Geo Viewport, and it's been lauded as a really an international model for the way to inspect properties. It's been pretty amazing. It allows for no downtime. It's obviously safer than having folks out there driving around, cheaper in a way, and gives us really a better viewpoint of the property, so that we can find things that maybe we didn't know were there, or things that were no longer there, to make sure that our tax roll is being efficient, effective, and that we're being more accurate. All
Bob,
sales are inspected in the year that they sell. I'm sorry, was somebody asking something?
Yeah, Bob, that is for the benefit of the property appraisers, not for the people, right? They're physically inspected every 4 years.
Well, that's our job, is to inspect it, but it can be at the benefit, because I can tell you for every $4, for every 3, I think it changes from year to year, but as we track it, for every $3 that we add to the tax roll for things that we find, we've removed $1 from the tax roll of things, because we'll find pools that are no longer there. We may find an addition that somebody had put on that should have been on the tax roll, or other things, but we find, or we actually, it's allowed us, to the extent that we find things that people shouldn't be taxed on. A lot of times they don't know. Then we'll adjust it as well. So in a lot of cases, it does end up being to the benefit of the taxpayer. And it's funny because you say that, because I don't look at it in terms of benefit or not. I'm not in the revenue business. We don't go out looking for things. Our job is to value the property, and we go through that process. A lot of times people will say to me, "Hey, can you lower my taxes?"
Right.
Frankly, I'm not going to, since this is not necessarily a political call, but that one of the things that a lot of times people running for property appraiser, not necessarily only here, but maybe here, right, they'll say, "Oh, if I were there, I'd lower your taxes." Well, I can't promise that.
Right.
And as a matter of fact, it's actually unethical for me to do that based on ethical rules of appraisal,
Right.
because we're gonna assessment is an opinion of value,
Right.
and I can't go into it with the idea in the same way when you guys order an appraisal for your house,
Right.
you can't tell the appraiser, hey, it's got to come in at $350,000 so I can get the loan.
Right.
To do that, the appraiser has to say what? I have to not do the appraisal, right? That's the
Yeah.
right thing. So if I
Yeah.
were to say there and promise you, if I say, Steve, hey, listen, I'm going to lower your taxes, then I'm actually being unethical. All I can tell you is I'll give you a fair assessment of what we think the value is going to be, and then from there, the taxing authorities apply the millage and we go through the whole process. We'll
I
get
was just
that in a
I was
second.
just thinking
Yeah.
the cost of physically inspecting $520,000 has got to be tremendous. And 520,000 properties got to be tremendous every 4 years. But and what's the benefit
Yeah,
of?
well, what I can tell you though, if and we track this, and based on International Assessor Association standards, based on the way that we apply technology has allowed us, we have 5 less FTEs, and we're not at full employment, but we have, when I came in, we had 130 full-time equivalents or employees, up to 130. We have 125 now, and obviously the economy is much better now, or has been, starting back in 13 through today. So we have more properties, more activity, doing more with less because we've applied these technologies. If you look at similar sized jurisdictions, really not just in the state of Florida, but nationally, for our size jurisdiction, we're amongst the lowest in terms of our cost. When you roll our budget together with the cost per parcel, we're very, very low. And I'm proud of that because it shows that we're again doing more with less.
I just see, I'm a realtor. I just see when we sell a property, there's a correction. If the property isn't the way it's supposed to be, then it has to be fixed with the property appraiser, fixed, and then the title, everything has to be corrected. And I thought that would be the opportunity, but I didn't know it was being inspected.
No, that's part of state law that we have to do that to be fair and equitable across the board because
Yeah.
again, the idea is that we're in a mass appraisal world, so we're looking at properties from a much larger perspective
Right.
than just, you wouldn't do it contemporaneous. But that's part of having the next thing I was going to talk about is the magical date of January 1st. So that everything is fair and equitable across the board. The law says that you have to have a date of assessment. So you're saying, what are these properties worth on this given date? And that's January 1st of every year.
Mm-hmm.
And so it's not contemporaneous with at the time that a home sells, by law and by the Constitution. And actually, the United States Supreme Court has ruled on this as well. To make it fair and equitable across the board for the entire county, you use one assessment date to make sure that everything is comparable. Because as you might suspect, if I'm looking at a home today or business today, particularly let's say, and this is very, I think, will illustrate it. If I'm looking at how much a hotel is worth today versus what it was worth January 1st of 2020,
Ooh, yeah.
right? There's
It's
a big
different.
difference, right? Because the hotels, because on the income approach, they've been crushed by the pandemic.
Yes, they have.
And even a home sale that would have sold January 1st, the market changes
Yeah.
by, by October.
Yeah.
And so that's why you have the one date. So we're literally, in essence, historians. The trim notice that you receive in August is based on the value as of January 1st of that year. And so it's the market's changed by that. So that kind of talks about the thing. All sales are inspected in the year, and we do it as quickly as we can after the sale. There's three main approaches to value. They're similar, whether you're doing fee appraisal or you're doing mass appraisal like we do, but using the sales comparison approach, which is largely what we do in single family residential. The cost approach, which is replacement cost minus depreciation, or the income approach, which is used largely in the case of income producing properties, retail, and what have you. All right. Oh, exemptions. Obviously, the big exemption that the folks are familiar with is the homestead exemption. It's up to $50,000 on your primary residence. What does primary residence mean? It means your primary residence as you deem it to be. Does it mean that you live there 50% plus one? Doesn't mean that you live there 1 day, 50 days. You're allowed up to one primary residence in Florida at any given time that you designate to be your homestead. Now, you have to have legal title on that property as of January 1st, that magical date again. It has to be your primary residence, as we said. There are application dates. I'll tell you the March 1st deadline, we take late filed applications. You have to kind of have a deadline, but it rolls really until September as far as that goes. What do you get if you're homesteaded? You get a couple things. You can get up to $50,000 deducted from your assessed value. And the other important thing is that now, once you homestead your property, you now come under what's called the Save Our Homes cap, which means that their homesteaded property in the succeeding years after you homestead cannot go up more than 3% in terms of taxable value, or inflation, whichever is less. Inflation generally has been less than 3% for many years. I think it's gone up over the last couple of years since 2016 into the 2.1% range, but it hasn't reached that 3% threshold. So that's part of the reason I think that particularly when you have a county that's largely homesteaded properties, that although the value goes up, you don't feel necessarily in terms of a hit to your taxes. So that's why a lot of folks don't necessarily, I think, feel like they need to file value adjustment board claims. We're happy about that. But the Save Our Homes cap is important. Now, the thing about the same, and we'll go to the unintended consequences of Save Our Homes cap. The whole idea of the Save Our Homes cap was that folks were, quote, being taxed out of their homes, because in the old days, your taxable value and your adjusted market value were the same thing. So if your property went up 10% in a year, your taxes would go up 10%, or even more in some cases. The idea was the seniors and savers in particular were being taxed out of their homes. So the Save Our Homes, or the whole concept of tax caps, were to try to make it so that folks, depending on the value of their property, through no fault of their own, because their neighborhood or the area they live in continued to become more valuable, that they wouldn't be taxed out of their properties. Other exemptions, there's a bunch of them here. I know Steve wants every one of them. There's all kinds of exemptions out there. If you want to know if you're qualified, you can go on our website and take a look. But there's a whole bunch of them here, and the legislature continues to seem to want to add these from time to time. There's one on the ballot this time as well, to extend to surviving spouses to continue to have. I guess where there is a surviving spouse, but there's another one on the ballot now. That kind of fixes the loophole. But so there's a number of them here. I won't go into them in detail, but in addition to homestead, there's a lot of other exemptions, and that's part of what we do is to evaluate those applications.
Hey, Bob, I know you have to apply for a homestead, but occasionally we run into people that they've lived in their home a decade or something, and nobody ever told them, and they just they just don't have homestead. We're like, how come? Is there anything we can do with them, or just?
And that's a really good question, Steve. Part of the thing that I was shocked when I first came into office is that there's not necessarily a lot of discretion in those kinds of cases for the property appraiser to do much. And I was kind of shocked about that. And then the longer I'm in office now, I realize why that's the case, because it makes it kind of tough. So there's cases of actual homestead fraud, right, where somebody is renting out their home, or they're claiming two homesteads. Those are pretty simple. And we find those through various ways. We have our folks investigate those situations. There are situations in which somebody is a surviving spouse. They may be older folks. They may be that they lived in the home, their parents passed away and left it to them. There's lots of different situations. The reality is that they are required to file a new homestead application in many of those cases, and sometimes they don't know they have to do that. When we'll find those sometimes, and it may be, hopefully it's not years later, but from time to time it is, we are by law required. Now, if it was our mistake, if we could find any way to figure out why we should have reached out to them, then we can try to fix those situations. Otherwise, they are required to pay the back taxes. There's liens and penalties that are placed on the property, and it's not pretty, frankly. What we've tried to do is is to find more ways to reach out to folks. When we see a sale, if there's a property that in which a spouse dies, we get that information. We'll send a card out, try to reach those folks and say, hey, we saw this happen. Know that if there's that you need to file an application. Trying to mitigate as many of those, and we're having less and less of them.
Good.
Frankly, the office didn't necessarily do that in the past, and many offices don't. But my thought is, to the extent that we can try to fix those situations before they come about, but sometimes it's difficult. But no, we really don't have a whole lot of discretion in those situations, unfortunately. And you'd be surprised. I mean, I've had folks that have gone 2 or 3 years, and these are, the South Tampa folks, Harrowwood folks that pretty savvy. One actually is a reporter, interestingly enough, that was doing a story on The Office a while back, and we were talking about this and that. She goes, "Yeah, no, I need to homestead my property." So, did you just move in, or did you just buy a property this year? And she's like, "No, we've been there for 2.5 years."
I know it happens a lot. I just don't buy
It's unbelievable.
you guys live in South Tampa and have great resources and stuff, and you haven't homesteaded your property in 2.5 years. So
nobody told them, and they just don't know. And there's
yeah. Well, the other situation, as long as we're talking about that comes up all the time, and that people will plead ignorance, and that's fine. In fact, I just had a call yesterday from somebody. No, it wasn't even a call. I was at a Cuban restaurant in West Tampa ordering some soup. And the lady behind the counter, she's like, "Oh, I need to call you because my taxes have tripled." And I said, "Did you just purchase the property?" "Yes." And it's a situation where people don't realize that when you purchase a property, because of that January 1st deadline, you in essence, the previous homesteaded owner that may have been under. And I asked, "Well, how long have they lived there?" It's like 15, 20 years. They had a cap on their property. They were homesteaded. When they sell their home, they abandon their homestead, and the new owner basically assumes their tax liability for the remainder of that year. They're basically under that old homestead.
And they forget about it after that.
Forget, right? And so then come January 1st, the cap resets.
Yes, right.
Right? And they establish their homestead, hopefully, if it's a homesteaded property, but their taxes are going to go up because now they're paying on the actual value of the home, not as it was value minus save our homes.
We do our best to explain that.
They call us. They probably call you guys too. "Hey, you didn't tell me."
I know. Yeah.
And it's just we try to do the best we can to get that information out. We have, and we'll show it at the end of this presentation. But the tax estimator is important. But but boy, I get that all the time from folks, and it's a shame. But they need to factor that in when because they'll get those first few. Depending how long they may buy the house early in the year, and they may have 11 months of being of lower mortgage payments, and then all of a sudden they jump up the following year and they're like, "Oh goodness,"
People ask us when they want to buy a house, they say, "How much the taxes on that house?" And I say, no, it doesn't matter, because after you buy the house, it's going to get reassessed. So
right. Yeah.
Look at the taxes, the tax estimator, and that's what you have to estimate for it. And we get that question a lot.
I'm sure you did. I'm sure. And we've tried to, and we're trying to do more to provide more information on the website. And more tax, our tax estimate I think is pretty good, but so people know what they're going into. Let me talk a little bit about portability, because this is important to folks, that realtors in particular. So along with Save Our Homes again was to try to get at the issue of folks that were whose value was going up and their taxes were going up, coincidental to that. And so the tax caps came into place. Well, then there was this unintended consequence. Being in the legislature, when we pass big bills, there's always an unintended consequence, right? So the unintended consequence was now you had this great tax benefit because you were under the Save Our Homes cap. But guess what? I'm never going to move out of this house because I don't want to lose that. And so for folks like Steve that were trying to sell homes, it wasn't a good thing, right? So the idea of portability came about, that you could transfer your Save Our Homes cap or a portion of it to your new homestead to lower the initial taxable value on the new homestead. And so that's what portability is. And you have, now here's one of the things, and you'll see it on, if you haven't already voted, you're going to see this. It's one of the things that I, along with Mike Twitty, my counterpart in Pinellas County, we're kind of championing, I guess, whatever. I should get that right, since Tampa's become where all the champions are. But anyhow, we were pushing for this. The idea is that if you look at the law, it kind of can be misread that you have 2 years to port. You really don't. You have the remaining portion of the year that you're in,
Yeah.
okay, the tax year, until December 31st of the following year. So if you were to abandon your homestead today, if I were to sell my home and abandon my homestead, I would have from the rest of just a few more days in October, November, December 31st, and then the following year up until December 31st. So really a year and a couple months. Some folks have been caught by that. Maybe they're doing new construction and don't finish it in time, don't find that dream home in time. So Amendment 5 that you'll see on your ballot speaks to that issue and allows for folks to have 2 full years plus the remainder of the tax year they're in. So they will get 2 years. And we think it's a good consumer friendly idea for folks. The deadline's the same for that as it is for Homestead, March. And you can use that to upsize or downsize. So if you're buying a bigger home, you can take up to $500,000 if you have that much support, or it's a percentage if you're downsizing for folks that are downsizing once they're empty nesters.
I think the only reason anybody would vote no for that is that they just don't understand it.
Well, and and it's interesting because I had a conversation. I was on a radio show Saturday, and I had a gentleman on there, and he was against it because he thought that was giving the Tallahassee the Tallahassee more say so over local government decisions or something. I had to explain to him that first of all, literally everything that we do, it really isn't a home rule issue. Basically, everything the property appraiser does is already mandated through state law or the Constitution. And he also had an issue with how willy-nilly changing the Constitution too much. I understand that, but all these exemptions are in the Constitution. So the only way that you can really change this portability is in the Constitution is by doing a constitutional amendment. I understood that as well, but it's the only way that we can really get at it. Probably some of the stuff should have been state law instead of the Constitution. And the third reason that some people don't like it is that in theory, it could take some money out of local coffers in terms of tax dollars. Mm-hmm. Frankly, that's not the way I look at it. This is a benefit that you've earned through the law, and it's yours anyhow. So to give folks a little more time so that they don't lose it with no fault of their own, it's really not an issue. And frankly, I think it's a de minimis amount, and I think that the revenue estimating in Tallahassee overestimated how much it may end up costing folks. So I was talking in terms of local government. So anyhow, I'm for it. I would advocate for it.
I think it'll keep people locally too, and keep them in your community.
Yeah, absolutely. So let me kind of quickly go through this slide. I love because if you're old enough like I am to remember like Grandma Rock or whatever, I'm just a bill they used to have during Saturday night or Saturday cartoons. This is the quick and dirty property tax process, and I kind of spoke to it a little bit earlier. But literally, our office assesses the value of all the properties in Hillsborough County and determines the exemptions that people qualify for, and then we report all that to the taxing authorities. The taxing authorities are the City of Tampa, Hillsborough County, School Board, all the folks that have the ability to a portion of the millage rates that end up being your taxes. From the desired revenue that they need to fill out their budgets, they apply then the millage rate, and then we send out the dreaded trim notice. The trim notice, the notice of proposed taxes that all the property owners in Hillsborough County receive. Now, if I were to ask you how many of you read it, a lot of you would raise your hand, and some would not raise their hand. If I said, why didn't you read it? You'd say, because on the top of it, it says what? This is not a bill, right?
Yeah.
Mm-hmm. Yeah.
This is not a bill is Greek for I don't need to read all this stuff, right? But actually, literally everything that goes into, and as a Tampa person, the paella that ends up being your taxes at the end of the day are on that. So it is a very important piece of paper. From that, now anytime during the year, people can come in and question their value as it's on a rolling basis as we put more and more information in the system. But at that point, folks will start calling us. We'll get 2 million hits on our website, our page views, and hundreds of calls from people, and that's a good thing to try to answer questions about their value or what have you. If they feel like they have to go further, then they go into the Value Adjustment Board process. They have 25 days from the point that we mail those trim notices to file an appeal if they disagree with their value or an exemption denial. That goes throughout September, and we've just now started having our Value Adjustment Board hearings. And from that, a lot of those will be withdrawn. We'll fix as much as we can fix, and a few will go forward for the Value Adjustment Board to decide. Ultimately, in November, that's when the tax bills go out. And I say that the tax collector, that's the person they write badly about in the Bible, not me. They're the ones that actually go and ask you to pay. Obviously, if you pay before March 30th, you get a little bit of a discount, but that's the process. And then ultimately, the revenue goes to the taxing authorities from the tax collector to do all of the things, fill the potholes or not fill them, or do all the things that they should be doing for all of us. Here's our tax estimator. We spoke a little bit to this, Steve. It's right here on our website. If you haven't been on our website, I know most of you, if you're in finance, insurance, and real estate, or probably the legal profession, you're on there almost daily. Or if you're just trying to, like find out stuff about your neighbor. But there's a ton of information on here, and I will offer up to you, we can do presentations, and we've done them we do them almost weekly. Our IT department, our folks will go out and make presentations actually just about the website, and there's an awful lot of horsepower in here. We're very proud of it. It's actually won awards as one of the best public-facing websites anywhere. But the tax estimator's on here. You can click on that,
Bob, do you say that tax estimator is close to accurate?
Well, here's what I'll say about it. And there's a nice long disclaimer. So yeah, it's absolutely accurate, except if it's not accurate. So it's no guarantee, and things change obviously, but it gives you a pretty good idea. But it may differ from your final tax bill, so I'm not going to tell you it's exact. What I would always tell folks, if you're going to err on the side of caution, go with the higher number. If you need a closer number, if the deal's coming down to a few $100s in your mortgage, you can always get with us, and we'll give you a closer estimate. It still may not be exact, but it'll be closer.
Okay.
But I would say if in this case, we've plugged in a home, the sale price of the home, and it's going to give you an unofficial estimate of your taxes. Go with the higher number. And if you say, "Gosh, then you sure?" Then we can always try to get it a little bit closer. But it's fairly accurate as far as that goes. And again, now you also can go in here and throw in portability. If for some reason you're moving from a home, that then you have the ability to port. Then it's going to show you what your taxes may be, estimated taxes after you subtract your port. Any questions on that? I think it's pretty self-explanatory. But again, what I would point out to you, if you really need a closer estimate, call us. We'll get our folks to give you something. One thing I wanted to point out before I take some questions. One of the things, and obviously we've all been going through this terrible pandemic together. One of the things that I did was, and it was kind of first of its kind, I believe, I know in the state and one of the first in the country, was that I put together a task force to look at the property tax impact from COVID, and try to get some ideas going forward. It's kind of what we'd already seen at the time we started meeting, what we were seeing contemporaneous to the meetings that we were having, and kind of projecting forward. Again, we are limited in what we can do in any given year because the value is set as of January 1st of that year. So a lot of the effects on our hospitality industry and others and small businesses happen after January 1st. So one of the things that we talked about was in the case, it's not out of the ordinary, and more ordinary these days, unfortunately, that you'll have a natural disaster, hurricane or tornadoes or what have you, flooding, things that happen during the year. And the legislature in the past has allowed local jurisdictions to take into account, for the purposes of ad valorem taxes, some of those kinds of things after January 1st. I'm not sure exactly how we would do that in the case of the pandemic, where it literally is for some businesses a Category 5 all year long, and particularly in view of the fact that they didn't meet in special session to give us those tools prior to now, and they probably won't meet until November at the earliest. So I'm not sure how much they can do from that standpoint. Maybe they'll give us some tools to reach back into 20. Certainly in 2021, we're going to be able to take into account businesses that lost income, that were closed as a result of these kinds of situations, hospitality industry and otherwise. Those folks were all at the table in this task force. I had experts from literally every market sector going forward. And it's really kind of a strange thing because there's some market sectors. If you're in the food distribution business and some others, you've been doing quite well. I had lunch with Blake Casper the other day, and obviously, if you know Blake, they own Oxford Exchange, and they were closed down and have just now getting back to normal there. But they also own the Caspers, obviously, own all the McDonald's around, right? And they've done great, during the pandemic with McDonald's. So, kind of depends on who you are. Some of the other ideas that we put forward in the form of through our Property Appraisers Association of Florida, that I'm the legislative chair and second vice president, to the legislature, is to look at some ideas to maybe extend the due dates for property taxes, waive penalties and interest and other things to try to, if we can't knock those numbers down for folks, at least we can give them more time to pay the bills and maybe not be penalized if they pay them late. So I just want to throw that out there as something that we did proactively, and I'm pretty proud of the efforts and the work we've done. So that's me. I think most of you have my information. Feel free to contact me if I can ever help anymore, or if there's anything that you think of after the fact here that you wish you would ask me. So with that, I think we can, I'll answer any questions that you may have. I need to stop sharing, right? So, there it is. I'm back.
Okay.
Good deal. Any questions?
Any questions? Some of you guys are muted.
I might be.
You're open.
Yeah.
Huh?
Hi, how are you?
Well, that was great information,
Okay.
Bob. It's a
I hope
lot.
so. I go through it
Yeah,
all.
it was.
I hope I'm not boring people, but
No.
Bob, my wife Sandra has a question, but she's
Okay.
trying to explain it to me in the background.
Hey,
Hi, Sandra.
I didn't have a mic on the computer I was watching, but the question is how do you come up with the assessed value? Because obviously that's very different than the actual market value. So what fees?
Somehow I knew I'd get that question. Well, let me start by again, we talked about the approaches to value, and they're the same whether it's your fee appraiser, or your Hillsborough County property appraiser. That being said, we're in a mass appraisal world, so our values are based on a much larger universe of properties. So let's say in the case of a single family home, you get an appraiser to come out, and I'm actually selling our old house that I was leasing and finally got tired of tenants. So so I'm selling that, but so we've got an appraiser coming out. So he'll come out and take a look at that home, and then probably pick 3 or so comparables in the neighborhood, and do a much more kind of deep dive forensic look into that home. Right. Obviously, we don't have the ability with 520,000 properties necessarily. Every time that we're going to do, we can't physically inspect and go back in and see kind of the nuances, right? Whether they have granite countertops or, gold, whatever. So ours is a little bit different from that standpoint. So we're going to create a larger universe or neighborhood of similar properties, kind of create a base rate by which those properties, the similar properties, and this is all computer driven through mass appraisal, computer aided mass appraisal process. And then we're going to, add and subtract certain factors to get to a certain number. So that kind of accounts for the fact that our numbers will be a little bit different than say an appraiser might find based on obviously a smaller market sample. The other thing is that we then also by law have to back out the cost of sale. So if you say the home sells for $350,000, it's not actually worth $350,000 in terms of value of the property, because part of that cost of sale, a part of what goes in that $350,000 sale, hopefully is Steve's exorbitant, commission.
It's fluff. It's fluff, Bob.
So we're and other things that are
That's our expertise with.
Right, you're exactly you get what you pay for. So in Steve's case,
We should get more.
So we're gonna back out. So all those kind of things aren't necessarily value. So anywhere and that varies. I can't tell you, but it may be 10, 15, 20% kind of accounts for the difference. Because people ask all the time, well, on your the house sold for $350,000, but you have it worth $280,000. Well, again, that's part of how that is. The other thing is, remember, we're assessing the value of the property as of January 1st of a given year.
Last year.
And that's and it could be 8, 9, 10 months later, and the market, in most cases, value from 2013 forward, we've had anywhere from 6.5% to 10% countywide, and going countywide, increase in property value. Some areas higher, some areas lower. So that also can account for some of the differences as well.
Right. Well, that
So
was
that's
my
why
question
if
because
you
of
look-
value adjustment.
And I don't know, there's a rule of thumb. People will say, okay, if we look at my numbers and you add 15% to it, that's closer. You know,
Mm.
you look at Zillow, I don't know what you're going to see, but that's basically how we do it. It's again, we have to look at a larger universe and also make it fair and equitable and across the board for the entire county. So it's assessment, but it's not the same. The approaches to value are the same, but we're not trying to come up with the same number that you would come up with if you're looking at a fee appraisal for an individual property. That's
That was my
answers your
question
question well enough.
value adjustment board. Because like when you go to if you try to do a value adjustment, then you have to go back and try to find comps before January 1st of that year.
Yeah,
And then,
that's true, because we're going to look at comps based on largely the last quarter of the year before.
Right. Okay. And then, like you said, sometimes the assessed values are always lower than the actual market sales value. So then it's like trying to figure out, do I have a gripe, I guess you would say.
Yeah. Now we are we're looking at at adding some more tools to our website to allow you to access more contemporaneous comp information sales. And it's always tricky because we don't want to, again, we don't want folks to use that. It may help in terms of trying for you guys to try to get closer to what the values are, but they won't necessarily jive with ours. But there are some. We're actually looking at some different software packages that we may be adding to our website. The other thing that we'll be adding, I know we'll be adding soon, is more permitting information that we keep getting questions asked. The people would like to have more permitting information more readily available. The only question again there is we're not the keeper of all the permit information, so we'll have to put another one of those nice disclaimers on it so somebody doesn't say, yeah, but the property appraiser's office said this. Well, we'll try to lead you as best we can, and then but make sure if you need actual numbers or if something's missing, it's not our fault. But
What do you think?
we want to try to make our information portal as robust as possible for folks.
What do you think the future of Tampa is, Bob?
The future of Tampa?
Yeah.
When I'm married, you mean?
Yeah.
Yeah, sure. No, well, there's so many unknowns right now, Steve. I mean, you hear everything from, the economy is going to tank, in 6 months to depending on what happens this election, that it's going to be great. I think that we are in a good position in that there's so much going on here. There's so much in the pipeline, so much new construction. And remember, again, a lot of the things that are being built that haven't gone into the tax base yet, until they're, quote, substantially complete, which is really CO, all of the residential units downtown, midtown.
Nice.
There's a lot of stuff that's in the process that some of it will be done before 2021. Some of it will go online as of in 2022. So we're going to see. I think the bigger issue is going to be for state and local government is the squeeze they're going to have on their budgets based on, and we will have to a certain extent, although ours is approved through the Department of Revenue, as a result of COVID, loss of sales tax revenue, bed tax, and those kinds of things. There's going to be a squeeze, and absent some help from either federal government or someplace else, the state government's going to pass a lot of the costs down. My concern is that once you do that, and not that I'm necessarily the big, spender, but the reality is to keep things going, you've got to have a permitting department that's looking at permits. You got to have a development department that's looking at, so that it doesn't slow the economy down from the standpoint of just getting stuff done. Because there's certainly, there's still pent up demand for stuff in Hillsborough County, and that may be, it may be short lived, but it could certainly it could hurt us, over the course of a year. A lot of things that are going to be completed prior to January 1st will come online. I think that'll help a little bit in terms of the overall, in terms of the overall pot of money that'll be available next year. 2022, I think a lot of the things that are being built downtown, midtown, other things will come online. I guess finally the Patels will finish their mansion.
Ooh, finally.
Their
That'll be a lot of taxes.
yeah. So that may be enough for everybody, but we'll see. I mean, I'm still optimistic. I think we've got to get through this. I think once depending on how long it takes to get through this pandemic, you're seeing things slowly bounce back. But I'll tell you, it's incredible. When you see when you talk to Santiago Collada from Visit Tampa Bay, and you think about the fact they went 2, 3, 4 months in downtown hotels that would have had Final Four, Lightning, WrestleMania, which is one I hated missing the most, and other things, 20% occupancy in those hotels, and all of the spinoffs from that. It's scary. We have Super Bowl coming, but we don't know what that's going to entail, what it's going to look like. So certainly it's going to be, from that standpoint, that's where the squeeze, I think, is going to take place. But I think we're in a better position in the Tampa area than many other areas of the country.
Well, this group, CABA, is going to keep the north side of Carrollwood, the economy going. We're going to keep it going up here.
Yeah, that's right. You're going to do it all by yourself.
We try to give each other business.
Sure. And I think one of the things that we're going to monitor and look at closely, and we can't predict the market and we can't chase sales and that kind of thing, but it'll be interesting to see what happens. Vacancy rates, obviously, if you're talking about Carrollwood, you're talking about strip centers, a lot of small businesses that have gone out of business or what have you.
It's a shift.
What are the vacancy rates going to be like? What's going to come back? You've heard that. When businesses do come back, how many of their workers, there's this thought that 40% of the workers they won't bring back immediately. All of that is if you talk grade A office space, a lot of folks now, for better or worse, are finding ways to do business, right? So the same thing we're doing here, a lot of folks are saying, listen, I don't need to have as much office space. I can have more people work remotely. Well, what does that mean in terms of office, the value of office and those kinds of things? So there's a lot of unknowns that we'll have to see going forward, and maybe they'll find ways for business to be more efficient, more effective, and be more profitable doing it different ways too. So there may be some good spinoffs from all this. Who knows?
Yeah, definitely.